Good morning, everyone. Good morning from Los Angeles. Welcome to Trading with Sergio. Every Monday and Wednesday, 10 a.m. Pacific, 1 p.m. Eastern, followed by Power Hour with Sergio every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Welcome. How was the weekend? A lot happened over the weekend, didn't it now? It seems like with the new administration, there's something going on every single weekend. A couple of weeks ago, we went over and took Maduro and his wife from Venezuela, and now StreamYard is acting up again. I don't know what's going on. Frozen? Gosh. Anyway, so we went and took Maduro and his wife from their bed. There are some ridiculous accounts of what happened from his bodyguard, supposedly. I don't know if it's true or not, but if it's half true, goes to show the power of our armed forces. It's on X. I would highly recommend you guys go read his account of what happened, um, how this all went, and anyway, um, so um, welcome to Trading with Sergio. Hopefully, StreamYard is not acting up. I will answer the questions um, shortly. What else went on? Well, poor old Jay Powell is getting sued um, by the administration. I mean, if there are two people that don't like each other, it's President Trump and Jay Powell. Um, I'm pretty sure it's not an act. And then overnight, actually, the future sold off. But then, as per the last, I don't know how many years, dips was bought. Like, okay, I thought my put debit spreads would do a little bit better. Well, they're not. But again, I'm long other stuff. It's more of a hedge than a directional play for me. And obviously, there is economic news. That's this week is coming out. So let's go through those real quick. Oh, how did I forget? On Friday after the close, President Trump announced that enough is enough. Uh, credit card companies are ripping people off. I agree with that one. Although I don't blame the credit card companies. I mean, if I've been talking about this for over 2 years now. If you're carrying balances, you know what you're doing, I guess, I hope. And he said 10% interest cap. I'm like, okay. And then there's pros and cons of that decision. Obviously, we can talk about it, but today the credit card companies are selling off a little bit. There was talk that some of the BNPL, buy now pay later companies, would benefit at the open. They benefited, and then they sold off. So I guess selling the news. So Tuesday, tomorrow, December. Now we're caught up with the numbers. BLS is back to work. CPI inflation data on Tuesday, important. Again, tomorrow, October. Okay, so the CPI inflation data is for December, which is current. Home sales, new home sales data, October. We're going back 3 months because that's the latest data that they have. Well, home sales have been in the toilet. Mortgage rates are not really going down with the Fed cutting rates anyway, because the Fed cannot do much about the long end of the curve. Although President Trump said, they should be buying $200 billion of mortgage-backed securities. Like, I don't know if that's going to give a relief to home buyers. Affordability index is in the toilet, literally in the toilet. It's been in the toilet for a while, and nobody can afford to buy a house these days. Again, on Wednesday now, November PPI inflation, producer price index inflation data coming out, November, 2 months ago. Also on Wednesday, U.S. Supreme Court tariff ruling expected. This is going to be a wild, volatile week, folks. And then on Thursday, We have Philly Fed Manufacturing Index, which is not that important since we don't manufacture much these days. So Tuesday, Wednesday are going to pick up some volatility, I'm pretty sure. Metals are absolutely ripping. I mean, silver and gold, all the metal companies, metal stocks ripping. And silver, I think, is all-time high, gold all-time high. What do we say? Buy hard assets. I mean, there is some technical stuff going on with silver, with delivery issues and things like that. But, you know, you got to be in hard assets, right? Don't slave harder. Save in our hard assets. Crypto doing much. It was a little bit of a rally, kind of selling off now. Still going sideways as far as I'm concerned. You know, there's no trend indicated there. So yeah, a lot going on. So expect volatility to pick up Tuesday, Wednesday. We'll see what the Supreme Court decision, which was supposed to be coming out on Friday, it didn't. What that decision is going to be, I'm pretty sure that's going to be the biggest news, more than the CPI and PPI, because CPI is current, but PPI is going back to November. So yeah, a lot going on, and I'm positioning myself accordingly to what I see, and yeah, that's what we're going to do. Good morning, GHC 321. Good morning, Serge. Happy New Year, my brother. Happy New Year, my brother. I don't know if I know you, but definitely you're my brother. What's the best way to learn about trading and begin? Do you teach private classes? The best way is to educate and properly educate yourself. I do teach private classes. You can email me, Sergio@sergioavadian.com. Pretty simple email, Sergio@sergioavadian.com, and we can chat about that as opposed to on StreamYard chat. So email me, we'll start a conversation, and if it fits you, it fits you. As far as trading and beginning, depends on what you already know, but if you're a blank sheet of paper, I think that would be the best, so you don't have any bad habits like holding on to losers and things like that. Again, depends on what kind of trading you're looking to do. I don't day trade, so if that's what you see out there, people day trading making millions, it's bullshit. I haven't met too many day traders that are successful. Over the last 30 plus years I'm doing this. I swing trade if that fits your style. Obviously, trading many different things, right? You could be trading futures and stocks and options and all kinds of things. So, obviously, I can help you with all that, but first you have to decide what you really want to good at. Obviously, there are books out there. Then, what kind of analysis are you going to use? Are you going to use technical analysis, fundamental analysis? Are you investing? Are you trading? You know, all these things. We can figure those out via email, going back and forth. So, do I really think they will lower the cap, as he said, for 1 year? Yeah, why not? They could. But what's going to happen is that, a lot of people misunderstand. Credit card companies are just credit card companies. They issue cards through banks, and I don't know how the legalities are going to go with that. I mean, if they have to pass a law or not. I don't know if you can do that with an executive order. I'm not really fluent on the technicalities of the 10%, but he could. Just like they did with the car loan interest rates, right? All deductible now. No tax on tips. That was fine, right? So all I'm saying is, yeah, it could be done. I'm pretty sure. But the hit on the credit card companies, as a lot of people expected, isn't really that bad. I mean, if you look at Visa and MasterCard today, the two largest ones, American Express, not much effect is going on, really. And then the BNPL trade that people were thinking about, that didn't materialize either. In fact, they're selling off. So I don't know. He could, yeah. Why not? He's the president. And then if he has the votes, does it have to be by law, or does it have to, the law has to be passed, or I don't know. I don't know the technicalities, but he certainly could. But I don't think it's going to help too many people for the fact that new credit is not going to be issued. Okay. So we must understand something. About 75 to 80% of our $30 trillion GDP is consumer spending. If new credit is not issued, spending may slow down, so it may hurt on the economic end. And I've been saying this for a while. I like debt. I'm not against debt, but managed debt, right? So, for example, the good analogy would be, I believe debt is the oil of the engine, but then you have to keep track of it. You have to make sure you don't flood the engine with too much oil. What will happen? The engine will blow, or you don't have enough oil in the engine will blow. So you have to, maintain it, and you have to understand it. Well, same thing with credit cards. I have credit cards. I love floating the bank's money for 30 days, but I don't buy much unless I can pay at the end of the month, the balance. So I don't pay any credit cards. The credit card companies are counting on people to carry balances. That's how they make their money. They will issue you like 0 APR credit for 6 months or whatever, and then you just go splurge, and then you don't get carry balances, and that's when you get screwed. And that's when people start getting into trouble. And then credit card companies, it's like a plastic crack. They issue more credit. Well, now you're just juggling 2, 3, 4, 5, 6, 10 credit cards. Well, if you're running balances and make minimum payments on these things, you're going to pay forever. And the interest rates on these things, in some cases, are up to 30, 40%. Well, especially, God forbid, if you miss a payment, then what? Right? That's why I highly recommend do auto pay on pretty much all your bills. But the concern is, if they do that and the credit card companies don't issue credit anymore, well, people are, you can go check it on FRED, folks, FRED, Federal Reserve Economic Data. Credit card defaults are going through the roof. It's not my numbers, it's the Federal Reserve's numbers. Go check it out. Auto loan defaults are going through the roof. So economy is really, really not as healthy as people say it is, because people are already struggling with it. And then when we cut credit now, or don't issue any more new credit, right? Consumer may not spend as much as before, although Christmas spending was pretty strong. But this news came after that. So if the credit card companies hold back on credit, what's the effect on the general economy as far as spending is concerned? So we're going to all find that out. Yeah, he can do whatever the heck he wants. My point is, if you have credit, credit is fine. Debt is fine with me. I'm not like a Dave Ramsey type. This is every credit or every debt is bad debt. No, there's no such thing. I like using debt, but I like to manage it. Okay. And my point in all of this is, if you can't manage it, if you don't budget, you go splurge and buy stuff you don't really need to buy, and then you carry balances, that's when you're going to get into trouble. So, it's a wonderful thing. The bank is giving you free money for 30 days to float their money, because you know how you will go invest or deposit a check. Not that too many people do it these days, but what they do, they put a hold on it. So, well, multiply that times millions of people doing the same thing, and they float your money for a week. Do you think they're not earning interest on that? Of course they are. So do the same thing to the banks. Go float their money for 30 days. They're giving you free money for 30 days. But if you can't pay back at the end of the 30 days, don't do it. I would not do it. So, hello there, Clay. Yeah, passive investing has been huge over the last 15 years, 20 years, since these index ETFs came around. But that's why I don't recommend people to trade unless they know what the heck they're doing. If you're following some influencer on X or YouTube or whatever, and you do what they do, I don't know. I don't think enough people do their own due diligence before they get into trading. Trading is a tough game, folks. I don't know too many people who last. Okay. And in trading, you're going to blow accounts. I mean, simple as that. There's, you have to pay your tuition to Wall Street. And what I would suggest is, learn it, educate yourself, and figure out what you're good at. And I'm not a huge fan of paper trading either, because paper trading doesn't involve any emotions, right? So paper trading is like playing a video game. You paper trade, you blow an account, what'd you lose? Nothing. So it's like playing a video game. Push reset or replay or whatever, and then it starts over again. Once you get the money in the race, once you get your car in the race, that's when human emotions and greed and fear and all this stuff comes into play, and you will lose. I mean, look, the numbers are the numbers. I'm not sure if it's that high, but 85% or plus of traders lose money. To have longevity, you have to have super laser focused risk management, money management rules. You have to understand, if you're trading options, you have to fully understand the first level, second level Greeks, because there is this thing out there now. Oh, sell puts, sell calls, you'll make money. I mean, it's bullshit. It's complete bullshit. Selling puts comes with massive amounts of risk, and people don't talk about it, because what happens is that we have a bull market going on. They sell the puts. Even if they get into trouble, they get a sign, market comes back and saves your ass. Well, what? Go ahead and sell puts in an 18 to 24 month nasty bear market. Are we going to have one of those? Yeah, absolutely we will. When? I have no idea. But when you do that, that's when you're going to blow everything you made over the last 3 years, when the market was going up every single day. So to me, understand the risks, right? And manage risk properly. You should be okay. Again, I do agree with the passive investing part. Most mutual funds or hedge funds cannot even beat the benchmark, which is the S&P 500. When they have the best brains, best computers, best software, I don't know, best software writers and whatever, they can't beat it. Why? Well, number one, their size, obviously. When their size is billions and that they're trading, that's like the elephant in the china closet. They're going to go break stuff. The other thing is they use massive amounts of leverage, which I highly not recommend for people to do who are going to trade, and they get into trouble. So, that's why I separated long time ago, plus 20 plus years ago, investing versus trading. That's like business and pleasure. Investing, long-term wealth creation happens by investing. Trading, it's fun. It gives you adrenaline rush. You can make some extra money. And then if you're trading, your rule should be minimum, you should be 2xing the benchmark every year. If the last year, S&P was up 15, 16%, whatever it was, if you didn't do 30+% trading, you should not be trading, because there's costs, there's tax ramifications, obviously, of trading, because it's mostly short term. So my point in all this is separate the two. Heavily focus on the investing side, because that's what's going to create long-term wealth, compounding effect, especially if you're younger. So I do have an investment account. I have a trading account. I don't mix them up. In my trading account, I start the year with a certain number. I have a goal. I'm going to try to get there. Investment account is more buy and hold. Good companies that are not going to disappear overnight. No pump and dumps and none of that stuff. And it's more slow and steady, but then the rewards are there. So, basically you're trying to beat in both accounts the benchmark. And if you invest in good companies over long periods of time, you will do very, very well, especially if you do indexes. I mean, we know what the indexes do. Over 100+ years, indexes have returned 10, 11%. Now, is that good? Well, yes and no. The reason is because true inflation, true buying power loss of your dollars is a lot more than 2.5% that the government says it is. It's probably 6, 7% a year. So, but even with that, if you take 6% out of 11% on average, this includes down years, up years, and all that, you're still ahead 5%, which is fine. That's how you keep pace with inflation, because your W-2 is not keeping pace with any of this stuff. Although personal incomes have risen in the country, but not to the tune of 6, 7% a year. So, definitely trading has a part. I mean, the whole world is trading now. Look at all these zero DTEs people are flipping on a daily basis by the millions. So, separate business from pleasure, invest in good companies or indexes. Long-term growth definitely is possible, but in trading, you have to have rules. I mean, to me, a lot of people are out there today without education, without the proper education, because the market has been so good since the pandemic, basically, that people just throw darts in the board and buy something, and then it goes up the next day. I'm like, okay, but then when the pullbacks show up, like it did in April, when the index drops 20% and your stocks drop 50, 60, 70%, then that's when you blow the account. And that's when risk management, money management comes into play. So is it going to happen again? Absolutely, it's going to happen again, right? And then, but people don't learn what they know. The only thing they know is most people started trading in 2020. They're sitting on their ass and during the pandemic, and then government's giving you the money. They just dumped it into Robinhood and traded options, and they think it's that easy. It's never that easy, folks. Even when the market's making all-time highs, I can go to my 52-week low list, and there's hundreds of stocks making 52-week lows. If you're involved in those stocks, then you're toast. So, buyer beware. Understand the risks. Understand what's going on. There you go. There you go. See? I don't know what kind of ETF you were in, but good for you. FYI, Raslin, that is not normal either, by the way, so don't get used to it. Yeah, absolutely. Trading is good if you know what you're doing. A lot of people, I don't think they have the proper education to trade. And then what they do is, I call it the hope and pray trade. They'll buy something, it goes down 20%, and they'll hold on. And then loss of opportunity cost, all those things. They don't factor any of that stuff in. Trading is good. I can't complain. I'm a successful trader. Is crypto buy and hold long term? Yeah, I DCA'd more Bitcoin today. I DCA dollar cost average Bitcoin every Monday. I've been doing it all year last year, and this year I'm going to do the same. I'm actually averaging up my initial cost. My initial purchase was in 2020. I didn't buy anything after that. Now I'm just dollar cost averaging every single Monday, the same dollar amount. Absolutely is. I don't trade. I do not trade Bitcoin, Ethereum, or Solana. I'm only dollar cost averaging Bitcoin, taking it out of putting in my cold wallet. But I do trade the proxies quite actively, such as BMNR, BMNU, MSTR, MSTU, Solana, SOLT, and things like that. So there's a bunch of proxies that you can trade actively, but I do not recommend trading Bitcoin actively itself. For me, it's a buy and hold. Maybe for other people, it's something else. But yeah, I bought some more Bitcoin this morning. I think I paid 91 and 91.4. So yeah. Bitcoin for me is a buy and hold. I have positions in BMNU. When I go to the positions, I'll just show it. You guys go. Travelers, welcome. Traveler, what's up? So yeah, that's where we are. So today will be actually, if any of you want to come on, let me post the link, and then you guys can grab the link and come on. That's the StreamYard link. We can discuss anything you guys want to discuss. Yeah, don't be shy. Grab the link. All I'm asking is you're in a quiet space with good internet reception, unlike me, so we don't get cut off. So summarizing, I went through what the data looks like this week. Well, tomorrow and Wednesday, CPI, PPI. Wednesday, the tariff musical chairs Supreme Court decision is supposed to come out. It was supposed to come out last Friday. It didn't. So we're going to add some. We're going to introduce some volatility this week, I'm pretty sure. Other than that, so full transparency. This is not trading, investing advice, financial advice. What I do is very risky. Do your own due diligence before you get in there. If you're interested, I do have a members group on Telegram. Go to the YouTube channel, click join, send me an email, sergio@sergioavadian.com. I will send you the Telegram chat group link. On that one, I post my trades live. I post my positions at the end of each day. And this year, I started posting weekly account equity each week for the members. They also get members only live once a week, which is either Wednesdays and Thursdays, depending on my schedule. But it's been going on for a few months now, which is, I think, better for them because, you know, they have a chance to get a little bit of one-on-one going on. They last about 90 minutes or so. And I do the live streams every Monday, Wednesday, and Friday. Every Monday, Wednesday, and Friday, I also post my open positions for the regular subscribers on the community page of the YouTube channel. I don't think anybody else is doing anything like this. And this year, at the end of each month, I'm going to post the account equity at the end of each month for the on the community page for the public open, you know, subscriber base. So full transparency. I have nothing to prove. I'm not in a race with anyone. I do what I do. Like I said, though, do your own due diligence. If you decide to follow me, there will be losers, there will be winners. We're just trying to, you know, double, triple the benchmark on a trading account, investing account, something else. There's also videos of what stocks I own in my investment account. Again, full transparency. And again, none of this is financial trading or investment advice. So let's go to the positions. Hopefully you guys can see this, which I'm sure you guys can. All right. So what is going on? All righty. Okay, so I am long 500 ASST January 2027 leaps. ASSTs have 105, 106, they're 23, 24 cents. We'll see where they end up. This is my lotto ticket for 2026. This is a position been going on for about 3 months now, 2.5, 3 months. Initially it was a covered strangle. It started with, now we're here, along 3,500 shares of BMNU. I have cover calls that are expiring this Friday against it. I'm not a fan of cover calls. My members know this. I do not like cover calls. However, in certain cases, it's very appropriate. Lowering cost basis is important on these 2x ETFs because you have volatility drag or slippage, as I call it. You must do that with the 2x, 3x ETFs that you're trading because these things are not to be bought and held. I have videos about that on the channel, so go check those out, what volatility drag means. I am long 30 Photronics. PLAB is the symbol. I was long 40. I sold 10 this morning. February 2035 calls. These are directional plays. I don't pay too much attention to whoever else is doing whatever else is doing. I am long 35 put debit spreads, which actually about now I'm going to go add to it. Let me go add to it. Let's see where they're at. I'm long the 690 puts going out to on SPY going out to February 20th, and I'm short the 680 puts. All right, what happened? Did we freeze again? Oh, come on. Okay, here we go. My internet is sketchy because we have 50-mile-an-hour winds where I live at the moment. Hopefully we don't get cut off by the 680 puts. We're at 244. Okay, we can do 5 more of those. At 240. Okay. Put that in. Okay. That's the, volatility. If the volatility picks up and CPI numbers are bad or, whatever. I think the Supreme Court decision is priced in the market. So we'll just kind of hedge the account a little bit, the long positions anyway, with the put debit spreads. Again, those are February 690, 680 PDS put debit spread. I'm buying 20-30 cent calls on Wave Life Sciences. I'm long 70 of the February 20s. February's have about 40 days to go, which is plenty of time. And just today I started putting on, look, silver is obviously gone parabolic. I don't know where things end, but parabolics don't end well. We all know that. And I put a counter trend position on. I bought on ZSL, which is the 2x inverse ETF of SLV. I put on with the weekly calls expiring this Friday. Covered strangle. I'm long 2,500 shares at 338. That's about 344. And I sold the 3 puts and I sold the 4 calls for a combination of 16 cents, equal amounts. So why do you do a covered strangle? Okay, if the stock is here or whatever between 3 and 4, you will collect a premium. So that's about 4.5% return for 5 days. If the stock gets called away, the return is massive, obviously, because then I get called away at 416, cost 338. That's about 80 cents. That's about 25% for a week. Or if it's below 3, I will get assigned more at 3, less the 16 cents at 284. At that point, I will be doubling down to the position. Then I can sell 3 calls, do whatever I want to do. So pretty simple, pretty clear, really. Not much else is going on. I don't see much. But what I'm seeing, though, is that I'm watching few stocks that I want to get into. One is, I'll go through the charts real quick and then go back, answer questions, and then go have a cup of coffee. Here we go. Actually, let's go to the big charts. This is the S&P 500, all-time high, actually, at the moment. This is the triple Q. I do have a 52-week list. I put on that, actually, I put all the charts on that on a video coming out at noon today, my positions from Friday and my watch list of stocks that I'm watching. We've been just going sideways. Mac 7 or Mac 10 not doing much. Nvidia still going sideways. The other ones are ripping a little bit. Apple sold off, and now it's kind of, it's under its 20 and 50 MA. Amazon, moving back towards all high. Microsoft Meta kind of struggling. So, I believe, I put a video out anyway. I believe this next year and a half or so, or 2 years, indexes are going to be up at all. If anything, maybe low single digits. I think it's going to be a stock picker's market next couple of years minimum. So more paying attention to individual stocks. My goal, not my goal, but the way I look at things is in my investment account, which consists of Google. I paid $152 for Google. I sold Google's making a 52-week high. I got lucky. I bought it at $152. Then it went to $140 during April tariff crisis. I sold the May 350 calls because I don't want to pay short-term capital gains on that. So I took in $26. So sale price will be $376 in May of 2026, which will put me over a year and a day. I'm long Lululemon. I'm long 5 stocks now. Well, I'm trying to establish a position. So I'm long Lulu at 182. Then it went down to like 165 or so. We're back to 211. So handsomely profitable on that. I bought UPS about a month ago at 96. We're at 108. And I bought Kava through options, actually, by selling puts. See, on these cases, I sell puts, I get a sign. My cost basis is about 58.5, 59 on Kava. I do not sell cover calls on this unless it puts me a year out, and when I get called away, I take advantage of long-term capital gains taxes. And as of last week, I started selling some puts on Netflix. I know earnings are coming out. Stock is down from 134 down to 90, so about 40% sell-off. I just started selling February 88. If earnings come out, they're nasty. I want to buy the stock between 80 and 85. I want to have a full position on between 80 and 85. That will allow me to do that. So that's the long-term port. Short-term, we looked at already. As far as Bitcoin is concerned, this is IBIT. IBIT is the iShares Bitcoin ETF, the largest that's out there. Look, we had a downtrend. It's broken. We rallied to 50 MA. We got stuck. We're still going sideways. If we take another leg down, God forbid, but it could get nasty here. And this is Ethereum. This is the Ethereum iShares Ethereum Trust. We had a downtrend that broke. I'm about to actually. I should remove that line. Maybe for snapback, I'll keep it there. So Ethereum is also going sideways. So is BMNR and BMNU. So on my BMNU position, I'm short 6, 7, and 8 calls expiring this Friday. Cover calls. If they expire worthless, cost basis will go lower. I think I'll be under 6 cost basis if the calls expire worthless, and then I'll sell another round and sell another round and sell another round until either I get called away or lower the cost basis to 0. On cases like that, I don't mind cover calls. On other stuff, no way. Because look, when things are going sideways or trending lower, not collapsing, just slowly trending lower, cover calls are okay. If the stock is tanking, you're selling cover calls taking $1 and stock goes down $10, there's no protection in cover calls. So don't listen to the gurus on X saying that, oh, I sell calls, I sell puts. I'm like, bro, it doesn't work. And then on the upside, it caps your upside completely. And so there's many academic studies. Go read it. I don't have to say it. Cover calls. There are a lot of cover call actually funds out there, structured products out there that they don't do well. So, but again, it is what it is. That's Ethereum. So I'm still going sideways. Still resistance up top. I think it's on Wednesday on the 15th. We have the House Finance Committee is going to vote on the what act is that? Anyway, so there is a big vote coming up, I think, in Congress at the House Finance Committee on a law that the new administration is passing. Obviously, new administration is very friendly to crypto. They even have a crypto and AI czar. So a couple of things I'm watching is one is CCL. I definitely want to be in there, which is Carnival Cruise. There's 135 stocks in my watch list. And 135 stocks. So it starts with AA. I'll put up some of them. I'll put up the big movers. I love this stock. I missed buying it this morning. No, and let me see what that is. Give me a minute. Let me finish by saying that in my investment account, I like buying low, selling high. In my trading account, buy high, sell higher. Can't do buy low, sell high on a non-trading account. I don't anyway. I don't prescribe to it. I think it's idiotic. Yeah, NXT is the symbol. Yeah, I missed it. Any pullback now? Yeah, now it's at 100. Shit. Yeah, any pullback hopefully consolidates a couple of days. I'm going to get in there. CCL is another one. I mean, there's 134 stocks. I don't want to go through all of them, but mostly greens anyway. So Rocket Lab is Rocket Mortgage is another one. I like 52-week highs, folks. Higher highs, higher lows. Going with the trend. Missed this one too. Gosh, I need to pay attention to these. Yeah. Yeah. I mean, you guys do whatever you want to do, obviously, but as far as I'm concerned, this is the way it's going to be for me this year with laser focused money management rules. Vicor. Oh, wow. I pulled back to 123 today. Already 138. Shit. Yeah, I need to be more careful with these. I need to set my limits or alerts tighter on a lot of the stuff. Anyway, there's let me see how many stocks there are as of today. 134 stocks. KTOS is one. Carmen is another one. These are the types of stocks I want to deal with, right? I don't want to deal with riffraff. Or you can go deal with all the 10 stocks that the internet talks about. SoFi, who gives a shit, honestly? There you go. SoFi, they trade Palantir. They're all in love with it. They've been going sideways. Palantir and Nvidia have been the same price since last July. No joke. Okay. Tesla has been the same price the last 4 years. It's just made a 52-week high and then pulling back. Actually, Tesla is on my list. Everybody's like talking about IREN, NBS. I'm like, bro, or Rigetti, quantum computing. Everybody talks about the same shit. I mean, that stock went from 58 to 20 in about a month. Sell puts on that. I mean, now it's going sideways. Now, actually, I kind of like it. I was short all these stocks, by the way. So, as far as silver, I mean, parabolic, stuck on the upper Bollinger Band. Yeah, that's why I took the other side. We'll see how that goes. Did the cover strangle on ZSL? We'll see how that goes. If everything expires worthless by Friday, I'll sell the 3-4 strangle again. And this time it's like 80 cents. Now you're talking 20% for a month. So it's a decent position, I think. Not my favorite, because I don't like doing counter trend stuff. Or everybody trades Hood. I'm like, okay, well, I mean, again, Hood is the same price as it was last July, August. I'm like, okay, fine. Do whatever you guys want to do. I don't want to look at those until it's time to look at those. And then when you look at the 52-week high list, it gives you enough ideas to trade while the other ones are just going sideways. Unless going to sell some naked strangles or do whatever you need to do. I get it. But Chinese names are flying today. I don't know what happened there. In fact, I talked about on the live a couple of days ago, saying to my group as well, should we look at BABA 200 EMA? It didn't get there. And now we're massive move today. So I definitely have to pay attention to BABA, Baidu, Bilibili, which is the YouTube of China. Look at these stocks. I mean, this is what we want to be in, man. We don't want to be in riffraff like HIMS. People go HIMS. What about HIMS? Still down. I mean, look at this thing. I mean, how do I know where it's going to stop? I don't know. I don't pay attention to too many people. And then here's one metal stock. Actually, I want to short. Actually, I may do that now. HYMC is the symbol, I think. Yep, Highcroft Metals. Parabolics don't end well, so I may just start buying some 25 puts on that for February. Maybe not today, though. Let's see. 25 puts, $1.40, $1.50, 120 IB, kind of reasonable. 30 puts are $3, $3.10, $3.30. Stock is 33. Wild. Gold, silver, wild. Absolutely wild. Maybe we'll wait one more day. We'll wait for it to pop outside the Bollinger Band. Last time it corrected from 30 to 21, literally in like 3 days. Same shit will happen again. Although MACD is putting a new high, so gotta be careful with these counter trend moves. All the silver stocks, 52-week highs, PAAS, Hecla Mining, all new highs. I mean, once in a while you gotta do some counter trend trading, but you gotta be careful. I mean, DG, new 52-week high, Dollar Tree, new 52-week high. I mean, you just gotta just be in there. Enjoy the ride, folks. CCL is definitely something I'm going to trade. What else? Albemarle making new 52-week high. Of course it is. A lot of copper stocks are just going crazy. A lot of aluminum stocks are going crazy. Century Aluminum, new 52-week high. Freeport McMoran, new 52-week high. I mean, look, man, this is where the money is at. I mean, look at this trend, okay? Stock was 40 a couple of, 5-6 weeks ago. Now we're at 60. You can't make money with that, then I don't know. You can go pick lows, I guess. You go, oh, this is low. I buy low, sell high. AMD, actually, I'm starting to pay attention now. It retested 200 this morning. Micron, it's its own world. It's making 52-week high after 52-week high. AMD I kind of like actually at this level. Let's see what it does next few days. Yeah, you know, ASTS retesting the old high at 102, but after going from 103 down to 50% down in about a month and a half of trading, maybe 30 days of trading, gets cut in half. And then that goes back there wild. These stocks are wild. APLD is another wild child. Goes from 40 to 20, 50% haircut. And then beautiful trading stocks. I'm not against it, but then a lot of people just only look at these. I'm like, there's 10,000 other stocks, folks. You don't have to be stuck in every same thing. Rocket Lab, new 52-week high. After it goes from 73 down to 38, 50% haircut. Goes from 38 to 90 now. I'm like, okay, good. Bloom Energy, same thing. These are the wild childs. Is the next move going to be in IREN and Oklo? I don't know. The IREN is kind of breaking out today. Oklo. I'm not against trading these at all. All I'm saying is just trade them when they're going up as opposed to buy them when they're going down because you don't know where it's going to stop. For example, Oklo went from 194 to 80. 120 points. I'm like, I mean, not my style to eat 120 points just to come back to break even. I'm not going to do it. Can't do it. I can't do it. Anyway, so that's where we are. That's where we are, folks. I don't know. If there's anything else, I'll answer the questions. Okay, so that's where we are. And I'm hoping you guys had enough of meat for today. Positions are the same, not much. And then I have more PDS to buy. If we get to 240, any outside that, not much. Not much. All right. Let's go to the front, answer the final questions, and then I'll say goodbye. All right. What's going on? What else? Okay, nobody's going to come. NEP, good morning. All right, everyone. Well, nobody wants to come on, so hopefully I answered all your questions. You all have a good trading week. Volatility could pick up tomorrow with CPI on Wednesday, PPI, and supposedly the Supreme Court decision regarding tariffs. We'll see. May all your longs skyrocket and may all your shorts tank. You all have a good week. I'll be back on Wednesday trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Oh, and please put a thumbs up. Supposedly the algorithm likes it. Share. And subscribe to my free newsletter. It's on the website, www.sergioavadian.com. It's free newsletter. You will get one. If you subscribe now, you will get one by noon. It's about 2 months old. I'm trying to improve financial literacy, so help me with that cause if you guys want and share that content. It's really good. It's basic stuff. And outside that, yeah, that's where we are. We'll see you guys. I'll post my positions today for the regular subscribers and members, obviously, and then Wednesday and Friday. And that's about it. We'll see you guys back here at 10 a.m. Pacific, 1 p.m. Eastern on Wednesday.